Yes. Yeah, just like all of you, I'm sure, I feel the same way about the insurance industry. I think of it as these big faceless corporations that don't really do anything that I like. They're maybe necessary, but whatever. But I think I can make an argument that they're a little bit more than that. So my story started with this offshore data haven in the North Sea, Havenco, Sealand, and it was a big platform that was built by the British in World War II, abandoned by them after the war, occupied by some pirate radio people, and then used as a place to do internet hosting by me and my company back in like 1999 to 2002. And we did all sorts of cool stuff. I learned a lot. I lost a bunch of money doing this, and it was a very interesting experience, but it was sort of my introduction to this whole like building structures in the sea and seasteading world. And sort of near and dear to my heart is this idea. I haven't really done anything with it over the 20 years after that, but there's these guys that have been always working on it. There's a couple in Thailand that built something, this little floating platform. It's a spar structure, so there's a large, like maybe, I think like a 6-meter steel tube. This structure is on the top, and there's a counterweight, a big concrete ball underneath, and it's floating. It's anchored, but it's floating in the waters near Phuket in Thailand. And they built this thing. Like a lot of people went through this whole process of like, how do you build this? Is it legal to do? Everything else. They just went and built it, which is sort of the hacker mentality. And they had a lot of really excited people talking about how wonderful it is, how it's going to be the next stage of economic development in Thailand, building these offshore structures, doing all sorts of cool stuff. There was one specific Army Commodore or Navy Commodore in the Phuket naval region of Thailand who decided, because he didn't know about this going on in advance, that it was a capital crime that they had committed, and they were going to catch them and execute them. So this couple, an American and a Thai national, basically slipped out of the country and fled for the crime of building a flagged ship and anchoring their ship in an area fully safely, everything else. So that's another part of the story. They've progressed to do this kind of thing in Panama. They've moved there, and they have this company called Ocean Builders that's building these sea pods. I bought the first one last year. It's not finished yet, but they have a factory that makes these maybe 50 square meter fiberglass structures, the same as their previous thing, that float with a concrete ball. It's really cool. So this is an interesting thing. They're building thousands of them. It'll revolutionize the world, but that's not the core topic. What they did is they also bought a cruise ship, because if you remember with COVID, there were all these cruise ships, because if you look at your average cruise line, it's mostly sort of like older people who were the most affected by COVID, and they had to shut down. There was that one off of Japan, and basically cruise ships and COVID completely did not work well together, and you ended up with a bunch of cruise ships that are very expensive to build, but even more expensive to operate. You can build a ship like this new this is probably a $50 to $100 million vessel to build new, maybe a little bit less than that, but it costs in operating costs probably $10 or $20 million a year to sail it around. So basically, if it's not making money with all these like little rooms filled with people every single week, they want to get rid of it as quickly as possible. The scrap value of the thing is probably $5 or $10 million, and that's exactly what they tried to do. They realized we're not going to be able to sail all these ships, so we're going to take the oldest ones that don't make the most money, and we're going to sell them to scrap yards or to other people that are going to buy them. And the couple that had done Ocean Builders decided to buy it, and they called this thing the MV Satoshi. They bought it. They raised, I think, they had like $9.5 million they used to buy it, and they were going to sell apartments that you'd live on in this thing out in international waters and sail around and do all sorts of cool stuff. Unfortunately, you need insurance and you need a maritime register in order to operate a ship like this, because otherwise your crew won't do this. And I met them, I knew them already, and their whole thing basically fell apart and turned into this, which is where it is today. They had to sell it back to scrap because they could not buy insurance for this project. So this is a case of like a very innovative new project that people are creating, where people would take a disused cruise ship, turn it into a new place for people to live, do all sorts of cool cyberpunk stuff on it. And it failed, not because they couldn't raise money, not because they couldn't find people to use it, purely because no insurance company was willing to write a contract, even if they had a bunch of money to underwrite the insurance. So that was the thing that got me interested in insurance. I was never really interested in insurance. I had like personal insurance and everything else, but it wasn't really a thing that really was a big topic of interest. But I decided at that point to work with some people that are already doing an insurance company, and now I'm head of security for a crypto asset insurance company. So we do all sorts of cool stuff. But aren't insurance companies like big evil corporations? Like if you look at some of the biggest companies in the world, like Berkshire Hathaway, which is Warren Buffett's company, is like $714 billion. There's a bunch of like really, really huge companies. They are very traditional, very risk averse, very highly licensed, everything else. They are some of the most, I would say, corporations that you're ever going to find. And there's no denying that. That is definitely true. There's probably, around the world, probably thousands of insurance companies, but there's a very big power law where there's some really, really big ones, and these are some of the biggest. And when you interact with these corporations, they are basically everything you would expect of a huge corporation. They're very process-oriented, they're very big, they've got lots of people working in cubicles, they're basically everything you would think of as like the 1950s to 1980s mainstream corporate culture. A little bit more, as I've learned more about it, it's a little bit more like deal-focused, at least in London, but in general, they're very, very corporate, very traditional, very slow to change, very risk averse, which is kind of what you want in some of those lines of business. You don't really want your insurance company to go out and try to find crazy operational risks themselves. You want them to protect your risks, but it is kind of an impediment to them doing interesting stuff. But actually, like, what is insurance? It's something is insurable if it's something where lots of people have the same kind of exposure. So something like everybody drives a car, or everybody with a car has certain risk of getting in an accident, and there's a definite loss that happens, so you can tell if the loss has happened. It's not some sort of like vague, undefined thing. You can calculate what it's going to be. It's not caused by the person who owns the asset, so it's accidental. So it's not like you lose your job because it's not like you can't have insurance for quitting your job. You can have insurance for getting fired for reasons unrelated to performance. And the loss has to be potentially really, really big relative to the premium, and the premiums have to be affordable. So you can't really create insurance for something, like if you have cancer and you're going to die probably in the next like 6 months, you cannot get insurance for your life for the 6 months. Like, that doesn't work. And also, the other critical thing for insurance to work is if there's a really big loss, you have like a sort of a bounded upper liability. That's like you can replace a building, but if there's liability due to a building falling over and causing like a school bus full of like lawyers' children or something, like there has to be some sort of like cap on how much you can have liability. Otherwise, it doesn't work. So these are the things that make something insurable. There's a bunch of other things that could be related to insurance, but this is essentially the things required for insurance. And it serves some pretty important purposes. It's risk transfer. So basically, if you have some sort of, like you're starting a small business, you might not be able to, you can afford to purchase certain things on credit, you can afford to operate, but you would not have necessarily, if you're opening a sandwich shop, $10 million to deal with the liability of what happens if somebody gets food poisoning and dies from some food that you've served. So there's risk transfer from you as an individual to a larger pool of people. And the other thing is sort of implied in all these things is if you are getting insurance for something, you have to disclose a lot of the details of your business and describe what things are potentially risky, what things are potentially risk. So it lets internal people look at something and say, we can spend, this is a potential loss. If it happens, it would cost us $10 million, but it only happens 1% of the time, so maybe it doesn't happen. People are really bad at dealing with probabilities, but if it means not doing anything means that our insurance costs us $100,000 a year, but if we do something, it costs us $10,000 a year, that's a lot easier for people to reason about. So you end up with making these risks explicit internally, and then also externally. Like if somebody runs like a skydiving business and does not have insurance, and because they probably can't get insurance, that's a strong signal to you as a customer that probably they're not as safe as you really want them to be, so you're sort of taking your life in your hands. So it's a signaling thing. And some insurance also encourages behavioral change. This hasn't happened in the areas I'm going to talk about, but in general, you are discouraged from having super dangerous things because they're so expensive to insure. There's a lot of people where they would normally for instance, motorcycles versus cars and things like that. So there's some behavioral change that's sort of pushed by insurance risks. But there's a lot of cool stuff that the insurance industry has done to date, which will be illustrative for what we're going to talk about. Underwriters Laboratories in the US is a bunch of insurance companies that got together and created electrical safety standards. Before this, it's really hard. There's this guy on Amazon, I think he works for Google. He reviews all the USB-C chargers that he can find, and so many of them are basically death traps, and they're completely out of spec and everything else, and cables as well. if you're doing that with like 5 volts to 20 volts, that's one thing. If you're doing that with mains voltage, that's another thing. And UL has come in and created a bunch of electrical safety standards as an insurance body, not even the government doing it. There's also in the car world, there's the Insurance Institute for Highway Safety, and then analogs in every country, where auto insurers who have to deal with these claims, especially the medical claims, but also like property claims on cars, do a bunch of destructive testing of vehicles to make them better. And this was in some cases done by regulators, but largely done by the insurance companies themselves. And then of course fire safety. Like there have been a bunch of cases where, and building codes, where the risk of something happening, like the risk of a small fire starting in a building, that's maybe an uncontrollable risk. You can do some things to mitigate it, but the real risk is small fire turns into entire building burns down. You want to minimize that. You also want to minimize everyone dies in the building when the building burns down. So fire safety and building codes serve to address that. One of the things that I think is most interesting about insurance and what will let us build cool stuff is that it's sort of an alternative legal system. So you have the theory of legal systems that's sort of like the Western, like either civil law or common law system where it's a state-driven law, and you have people creating these codes, and they're created by nation states. They're geographical monopolies, and they do all sorts of things there where you have maybe criminal and civil law, maybe you have certain things like maritime law versus whatever, but you have these bodies of law that are created by nation states that are created over a period of time and are sort of relatively but they're usually geographic monopoly and not really in competition with each other. So you've got all these things. But there's this guy, David Friedman, who is the son of Milton Friedman, the economist, and the father of Patrick Friedman, who is a seasteading guy, who wrote a really awesome book. Like this is probably one of my 10 favorite books of all time. Legal system is very different from ours. It studies, I think, 14 different legal systems, ranging from like Somali tribal law to Icelandic law to everything else. These are legal systems that are themselves fully well defined and work perfectly well for their societies, but they're completely different than the mainstream Western law system. And it's very interesting to look that you can have a system that is so different from our system and works perfectly well. It shows that perhaps if you can have 14 of them, then there's no reason why you can't have 15 or more. And I think it's very illustrative for what happens when we start to build environments like crypto-anarchy environments where the fundamental principles that created Western law do not apply. We do not have geographic territory. You do not have monopolies on violence by certain actors. You have no hierarchy. You have people being able to enter and exit freely. You have anonymity. So all these things that sort of make the current legal system not the perfect fit for the environment that we're building or that we live in now mean that maybe there's a new legal system that would make more sense. And of course, the real advantage of an insurance company versus a government, no matter how bad an insurance company is, there's competition between different insurance companies. There's a few cases where there's monopolies in certain geographies and certain lines of business, but in general, there's multiple insurers. So if they do a bad job, they either go out of business and then the new monopoly comes in, or there's another company you can switch to. They're not necessarily completely different than each other, but you have some competition there. And I would love to have a situation where there was a competing US federal government that controlled some subset of US federal government territory, and I could choose between the two, rather than the current system of people competing for all or nothing control over one thing. There's also the crazy thing about a lot of insurance companies. There's a bunch of sci-fi novels and everything else that have gone. There's a private military contractor world, but there's also I think Werner Vinge's The Ungoverned, which is a amazing sci-fi novella about essentially people in an environment where there is the complete anarcho-capitalism, people living on little ranches in the Southwest, I think in New Mexico, and they're able to essentially have whatever weaponry they want, run their own private security forces as they want, and they're contracting with these big insurance companies and big security providers to provide like mutual assistance across these organizations. And then in the story, they get invaded by another country, and you end up with a bunch of these like little ranches run by people that get together with private insurance companies, and they are able to use like nuclear weapons actually to defend themselves against other parties. So there's that whole thing. There's a bunch of problems though with this insurance model. Like I like insurance. I think it's an interesting model for solving some of the stuff that we want to solve, but there are problems with it. Moral hazard is the definitional problem with insurance. Like so there's a bunch of stuff where I could choose to not get, I could choose to be safer than I am. Like there's things like I could wear a seatbelt when I'm driving a car. I could drive a really safe car versus a sports car or a very fast car or something like that. A lot of stuff like that. But if I have insurance for the risk, I might just, and the insurance doesn't price differently, whether I'm doing one thing or doing another thing, I might just skip the precaution. Or if I know that this risk is a very, very high risk, like there's something I'm doing that's incredibly dangerous, but the insurance company's only going to, and I like doing it, but the insurance company's only going to charge me a little tiny bit more for doing that thing versus not doing it, I'll probably end up doing it. So that's the real problem with insurance. There's also, and this gets worse and worse when you, the closer an insurance thing gets to something that's regulated by the state. In the US, probably the pathological examples here are the flood insurance program. So I live in Puerto Rico where we had this big hurricane a couple weeks ago. There's a national flood insurance program. So if you have a house that's built right on the beach, you can get insurance from the federal government that is subsidized. It is very expensive, but it is still probably 10% of what the price should be based on the expected loss. And people, as a result, build these like multi-million-dollar houses right on the beach. And they get destroyed by a hurricane or a flood, and then they get paid out by the government, and they rebuild them, and they get paid out by the government, and they rebuild them. So this happens over and over again. In a rational economic market, that insurance would be so expensive that people would either not build expensive houses on the beach, or the houses would inherently be cheaper because the risk of having to pay them without getting insurance. So it basically makes beachfront real estate really expensive, both to purchase and to have the government subsidize this. And this is one of the insurance markets that they do the worst on. The other one, the insurance market that, especially in the US, is particularly bad is the health insurance market because it fails those tests of insurance. Basically, everyone has well, unless you die of an accident like very quickly, you probably have relatively high medical costs toward the end of life. Like your last 6 months of life end up spending most of your medical costs. And that happens to a large number of people. So it's essentially, the premiums required to cover that are so high that unless you socialize it or figure out some sort of way to do cost-effective care delivery, you will not have effective medical insurance. And as a result, it ends up being this like transfer pricing thing. It's a crazy, crazy thing. The other big crazy thing about insurance is the insurance fraud problem. This is especially a problem as we move into like anonymous markets. There's a whole genre of like cats committing insurance fraud, which I think is one of my favorite meme genres. And there is I used to use the example of there was a famous factory in New York, the Triangle Shirtwaist Factory. And it was a complete horrible situation where they built this factory and it was building these things called shirtwaists that were not, they were like a thing that was popular and then was becoming less popular. They had a bunch of people, largely I think Irish immigrants that were working there doing sewing, and the people who ran this factory like locked all the doors so there was no way to get out. There was a fire. There's some suspicion that the fire was caused for insurance fraud because the factory was insured for a much larger value than it was actually going to ever make. So I used to use it as an example of fire safety coming from the insurance industry as a result of this, but in fact, it's probably a counterexample of the existence of insurance might have actually contributed to this incident happening, but it was also something that created lots of like labor standards and everything else in the US, so it's one of the bigger disasters. There's also certain areas of insurance that are incredibly dysfunctional. One of them, so I'm speaking at a DevCon in Bogota in I think like 10 days, and kidnap and ransom, like Bogota was really safe back in like 2018. It's not as safe today as it was in 2018. It is certainly not what it was in like the 80s and early 90s, but it's a non-trivial place. Everyone's getting private security. And there's a form of insurance called kidnap and ransom insurance, but it fails like almost all of the checks that were earlier in this thing. The crazy thing about kidnap and ransom insurance is if you get it, you're not allowed to say that you have it because having it actually raises your risk of getting kidnapped. Because if you have, like, I used to work in Iraq as a contractor and you're required by some businesses to have it. The existence of like a $5 million kidnap and ransom policy for somebody means that it is actually worth kidnapping them for getting $5 million, and it's a repeatable process. There's this whole debate between, I think the US government is the one that largely, is probably the outlier, maybe the British government, that believe we will never pay as a state ransoms to people that kidnap our people. We'll go in and try to rescue them, but we will never pay ransoms. A lot of European countries will very easily pay ransoms, and I think if you're the person who gets kidnapped, you always want your state to pay a ransom for you to get you out. but it does create this like bad incentive of you kidnap somebody if they're an American. It's not really like you don't really want to kidnap an American. You certainly don't want to kidnap like an Israeli. But if you kidnap, bad things happen generally, and they don't pay out. But if you kidnap like a Portuguese person or something, the Portuguese government will pay you probably not millions of dollars, but hundreds of thousands of dollars. It'll be a very well-defined process, no real risk. So it encourages this bad thing to happen. And kidnap and ransom policies also do all sorts of other stupid stuff. There's the other problem with insurance is because these companies are very like stodgy big things, they create standards that they set in stone and they get written just like laws have all sorts of historical stuff that is maybe did make sense when the law was originally written, but no longer makes as much sense. Like a lot of telecommunications law is based on physical telecommunications wires and telegraphs and telephones, where physically applying surveillance devices to wires is the law. Now it is configuring something in a software switch remotely, so it's trivial to do, and a lot of that law no longer makes as much sense. The same thing with a lot of insurance standards. They set standards that made a lot of sense back when they were written. There's things like that password change requirement, that every 90 days or every 180 days or whatever you change your password. That is created by an early 1970s NIST standard to do password management that was never actually adopted, never made sense then, and then got written into a bunch of policies. So insurance companies are kind of responsible for some of that stuff. I'm sorry. But yeah, the kidnap and ransom product is an example of a dysfunctional crypto product, and I do not want to recreate that in the crypto space. I'm working on some stuff that's sort of better than that and sort of solves the problem. I think the problem of a policy where holding it actually raises your risk is like a complete non-starter. You want something where holding a policy does lower your risk, but it needs to be structured in a way different than this. Yeah, so basically you want to have flexibility for all sorts of new kinds of risks. You want new entities that enter the space and some state alternatives. So there's lots of cool stuff there. So now we can talk about the actually interesting stuff that you can do with insurance. I think there's a whole community of people, Balaji, the seasteading people, everyone else, that are trying to build things that are outside of the territory of nation states. And one of the things that rightly you would be very concerned about if somebody said, hey, let's move to the middle of the ocean, like 200 kilometers or 200 miles, nautical miles out from the borders of like Brazil or something, and live on a platform. You would rightly be very concerned about your safety, everything else, and like the solvency of the organization. That's one of the things where insurance companies could actually use a maritime standard and apply it and say, this meets certain safety requirements that are met by cruise ships that operate every day, or oil tankers, oil platforms, everything else, and they would have enough assets. They could easily have an insurance company, one of those companies that has like the $100 billion of assets, be an underwriter or a reinsurance provider to an insurance policy on this kind of thing. And I do plenty of relatively risky things, like driving around in a car in America is risky enough. Like that level of risk I'm largely accepting of. So if I could get my insurance risk for something like this to be maybe like within 10x of that, I would probably be willing to do it. I would not do it for like 1,000x. And that's something where insurance could be a really useful thing. There's the network state movement. So there's the idea of taking lots of people that would have property around the world under different regulatory regimes. So you might have somebody who has, like this space, you have somebody who has a space that is designed purely for manufacturing that's located in some other country. You might have a big community, like a housing community in some place. So lots of these discrete properties that are under different legal systems all around the world, different management, different ownership. And having somebody who can create a framework so that if there's a claim against any of these things, you could insure them as a collective entity against lots of negative things happening. In the same sense that you would not want to have a $10 million pool of assets to open like a sandwich shop, you would also not want to require people to have $1 billion of assets to open a new low-level new village or something like that. So this is a way that you can sort of risk transfer across these things. And also, the other critical thing is the most exciting stuff here is the anonymity technology and the idea that you can actually build realistically a lot of this technology in ways that are self-sovereign and fully anonymous. Like right now, there's the the jump from systems that require cooperation with the state and with large organizations, but we are getting to the point where I think it's broadly accepted by even the mainstream in the tech community that you can build this stuff in a transparent, open way, like I guess the solarpunk way, to do a lot of the stuff that's possible. However, there's a lot of problems with that, as have been described, and being able to do this in an anonymous way is great. But the problem with anonymity is you end up not having, you end up either needing to have a system that works perfectly and never has anything go wrong, or you end up with, if something goes wrong, the person who suffers from that thing going wrong may not be the person who is guilty or responsible for the thing going wrong. It may be that, like, there's the anonymous person on the internet says, send me your tokens and I'll send you back twice as many tokens. Scams like that are like the base level of that. But all sorts of things where you're going to have systems where there's no long-term reputation built up because you want to have each transaction be a discrete thing to be unlinkable. Because I don't believe you can have long-running pseudonyms in a system that are used very operationally and inexpensively manage them without very, very high risk of being linked. I think it's much, much safer to have a bunch of things that are unlinkable transactions. And without reputation, you end up with exposure on risk. So essentially, insurance pools, as a way, they can assess the risk of any given thing, and you'll be able to allow people to have unlinkable anonymous systems. And cool. So I'm very excited about insurance technology being used for sort of like new free projects, and I would love to discuss with people about those things. I'm on Twitter, and I have email, and I go to conferences all around the world. But there's a bunch of cool new kinds of insurance products that are happening on blockchains for cryptographic projects. Everything from technical failures of smart contracts to corporate insurance being moved onto these systems. But I think the most interesting things are things that do not have, like there's a whole world of taking things that have existing real world or non-online versions and moving them onto the internet. Like that's kind of boring, but there is a huge market for doing that. There's an argument of taking all the things that used to be paper, moving them onto Web 1, Web 2. That all happened. People made a lot of money doing that. Now there's the argument of recreating a lot of the Web 2 stuff for Web 3 or for other distributed systems. But if we just do it in a way that copy and pastes and creates a dependency on long-running identities, on regulated entities, everything else, there's not really much value there. You can interact with stuff in software rather than doing it through companies, but it doesn't really buy us the thing that we want, which is freedom from these large organizations. And by building these things, by building security contracts and insurance contracts in ways that allow people to decentralize the risk and decentralize who they have to trust, we'll be able to build a lot more cool stuff. So, cool. Thanks.
Thank you very much, Ryan. And I see we already have some questions, so I pass the mic.
Yeah, great presentation. You talked about a lot of problems with insurance, bad incentives and so on, but you didn't really talk about solutions to the problems. So in my mind, like what you have to do as an insurance company is to make sure that whoever uses the insurance can never get back the full value of what they have insured, like the actual market value. And if that is the case, then I don't really see any wrong incentives. So you should always have like co-insurance, that you pay a certain percentage of the actual market value of what you're insuring. So you never get back 100% of the market value. And of course, if your house burns down, there is a lot of sentimental value and irreplaceable things that you will never get back. But isn't that the solution, or is there still problems?
Yeah, that is definitely a solution to some insurance risk. I think what I like about insurance is preventing the losses from happening in the first place. So through underwriting standards and through other processes, making sure that one, you're lowering the incidence of risk, and two, you're lowering the severity and then potentially recovering when things happen. So that whole world does reduce some risk, but yeah, the malicious case of people burning down their factory in order to claim a higher value than the value is something that is protected by having less than full value policies. The problem is a lot of these assets do fluctuate over time, and it may be the case that somebody's factory is worth a certain amount when the market is going really well, but when the market goes badly and they realize there's a stranded asset, it suddenly becomes a rapidly depreciating asset. So maybe they are willing to do bad things more than the market will. And also as a people do replacement value contracts for insurance all the time. Like there's a lot of things, if you have a strong legal system where insurance fraud is punished by somebody investigating it, you can get away with doing a policy that is a replacement cost or even a larger than replacement cost policy for certain things. If it is like no one is going to cut off, like what is the value of someone's leg? There's policies like disablement policies where if you cut off your own leg, you then get a payout. And some people might become desperate enough that that becomes worth the premium to them. But that is sort of a dystopian hellscape that people mostly would like to avoid. But yeah, I agree that there's lots of ways you can mitigate these risks.
Hi, thanks for the talk. I'm myself from the gambling industry, and we always joke like the insurance, it's just for amateurs because you cannot insure someone who you have no power over it. Like if I place a bet on a horse, it's not my property, it's someone else's. But the model is the same. And I thought some time back that the anonymous, predictive markets would actually replace like gambling business and also insurance business, but it's still not happening. Yep. I'd like to know your opinion on that, like if that's even possible, or if you see this as a solution to get rid of the corporations profiteering from the thing. And the second is, if this happens, what do you think is the correct solution for the oracle problem? Because you still need, in insurance as in gambling, you need some source of the truth. Like, did the house burn out and burn down, and should I pay it out? Thanks.
Yeah, there's a whole spectrum between, I guess, gambling, insurance, financial markets, and some of the products do overlap. There's certain things like CDSs that are sort of unclear if they're insurance or a financial product. There's a lot of things like binary options that are basically gambling instead of a financial product. And then there's insurance and gambling. Like you can actually get insurance policies, not insurance advice, not legal advice. You can get insurance policies on third parties. It is sort of crazy. Like if you're a company that has a critical employee, the company can get insurance on that person's life, because if that person dies, then the company is worth less, and the investors in a company might want the chief scientist to have a policy like that. There is a whole crazy history, the tontine system and a bunch of other things that are sort of like predecessors of insurance, where it's a pool of money that if you have 35 people, they put in a bunch of money, and the last person alive gets to collect the pot of money. Also, there's a Simpsons episode about it that was quite entertaining. But there's a bunch of crazy stuff like that. Yes, I agree. The Oracle problem is one of the hardest problems for any sort of software system to deal with, and there's not a magic bullet to it. There is a idea that you'd have a very decentralized system of, it would be very easy to do a blockchain insurance policy against a very famous building being destroyed, because there would be enough independent sources of that you'd probably be able to document it from multiple sources. It would be very difficult to do an insurance policy against with cost-effective, and you could also do a reasonably good system with low dollar amounts if you had a state-provided register of deaths, and you could do life insurance that way, and you look in that, because it's already a crime to fake that data. So the risk of someone faking it is probably lower than a certain price. I wouldn't do a $100 million policy based on the register, but I would probably do a $100,000 policy based on it. So there's various risks you can do there. But yeah, solving the Oracle problem for everything, not just insurance and gambling, but for literally everything that is a piece of software that interacts with the physical world and does it in a trustless, decentralized way is the hardest thing to solve. Well, maybe it is one of the very hard things to solve. There's a bunch of hard things to solve.
Yeah, many questions, but I try to formulate one this way. It seems, especially in the insurance business, that the availability of information makes the whole system more efficient. So if we're in a situation where we do not want information to be available, then we could expect that it would cost more to be insured. Is this correct? So I try to think, and maybe I'm not very creative in that, what kind of situations would you want to be insured in an anonymous way, let's say, and be willing to pay a hefty premium because your insurer really is in the dark, about what's the situation probably they're insuring. Also, you made a very interesting remark about the pseudonymity in the end. Maybe if I have the chance, we can go back to that later.
Yeah, I think it is not so much that you would want to pay a premium for insurance to get anonymity, but if you're already operating in an environment where you have to be anonymous, then getting an insurance policy that is compatible with your anonymity would make sense. Like if you were, for instance, a Silk Road endpoint whatever seller, you would not want to get an insurance policy that required that you dox yourself to the insurance provider to cover like delivery risk or something like that, because if you did, that would become a legal honeypot for data and everything else. So there's people that are operating in environments where they already want to have anonymity, where they would need to have the anonymity, so they would pay the premium for it. I think you could, having more data about things, especially for recourse in the case of fraudulent claims, like it lowers fraud risk, it lowers the risk of an asset being insured. Generally, a lot of policies are written at like, will cover $10 million of value, or the lesser of $10 million, or the actual replacement value or actual value of the asset at the time, especially if it's something like a cryptocurrency where the cryptocurrency price fluctuates routinely. Otherwise, you'd have people take losses. They'd lose their custody system would fail when the price went down or things like that. So there are definitely cases where having requiring anonymity of the system does raise the cost to provide it.
Do insurers exist to provide insurance for anonymous people?
Okay. I don't know if there are any insurance companies that are regulated as insurance companies that do anonymous policies. There are a bunch of blockchain insurance alternative things that don't really require heavy KYC, so they're essentially the same thing in that they don't effectively enforce the KYC. A lot of them also do like KYC at the time of claim. They don't do KYC at the time of binding the policy. So you can end up with potentially an uncollectible amount, or you have to dox yourself in order to collect it. But if it's something where your business is destroyed, you want to remain anonymous because, let's say the positive example here, let's say you're operating a fully legitimate moral business in a country that is very dangerous. And if you reveal your identity, the tax people or the local criminals are going to come and like extort you, which is a fairly common situation. You might be willing to get a catastrophic insurance policy such that if your business completely gets destroyed by some external event, you would get a payout. You would have to dox yourself, but the business would no longer be operating, and then that would be fine. I think you could, the other reason for doing anonymous policies is, yes, they do inherently cost the provider more to issue because of these other additional risks and everything else, but also the cost of KYCing people effectively across borders is very high, especially for small amounts of money. So it may be the case that if you're doing very low value insurance alternative products across wide geographies where whatever, it might make sense, as long as you don't have a systemic fraud risk of people getting a bunch of policies and scamming on that, as long as it's individuals and you can guarantee that, and maybe you do that by the length of an account's existence or something like that, then you could probably make the argument it would actually be cheaper to issue that policy.
Thanks. I saw more hands up. I would prioritize those that haven't asked it, but if you're the only one.
Yes. Okay. So another part of insurance that I think is important is that you should only insure things that there is a very low likelihood that it will happen. But if it happens, it will be super expensive, like too expensive for you. So that's like I think very important part of fixing the insurance business. You should never have insurance that includes like regular maintenance costs or regular checkups if it comes to health, for instance.
Yeah. There's a counter argument to that. So I agree with that principle, and that is one of the principles of insurance. However, as healthcare insurance is probably the most broken of all the insurance because it insures medical costs that are going to be very high for lots of people. Just it does a time shifting function and it does some smoothing across people, but it largely is not actuarially supported by stuff. It's like certainly most European healthcare systems are heavily government subsidized, and most private insurance systems could not exist in the other world, like in a fully actuarially supported world. The advantage of doing preventive maintenance as included as part of it is that actually lowers your payout risk. Like if you can detect cancer, if you're obligated to pay for cancer and you detect it early and it's much cheaper to treat early, then it makes sense. The same thing would actually apply. Like there's a lot of policies like maritime insurance policies that require regular maintenance. So whether you subsidize it or not, I think that's a somewhat irrelevant point. If you have a policy that costs like $10,000 a year premium, whether you give them back $1,000 a year to do the maintenance or you require that they do this $1,000 a year maintenance to keep the policy in force, that's sort of like a transactional issue. I think for consumers, you do give them the money because people respond to crazy incentives. Like there's a bunch of stuff where you can be, like people that make very large amounts of money, if you send them a free small gift or whatever, they'll like answer a survey that takes them like 2 hours to answer, whereas they would never do 2 hours of work for that amount of money. So there's a bunch of people that are like irrational about that kind of stuff. But I think with consumers, it may make sense to subsidize certain of these things.
So my takeaway from that is that it makes sense for the insurance provider to subsidize those maintenance things, but it doesn't make sense for me as an insurance taker to pay for those things, because I'd rather pay for them in the open free markets in competition with companies for like regular maintenance, like fixing my teeth or other health issues or something. It makes much more economical sense for me.
Yeah, I agree that healthcare insurance is particularly pathologically bad, and also the problem with like third-party payer for anything. Like if I'm going out and paying for something myself, I will shop around and get the best deal I can get. If somebody else says I'm going to pay you up to $1,000 to get this like your meal, it's going to be $1,000 meal. It might be like a $999 meal, but it'll be very close to the amount. So if you don't have the benefit of saving money, you're not going to.
Hi, I have a question about anonymous policies. I don't quite understand how they could possibly work, because just as an example, going back to being a darknet market vendor and trying to ensure, I don't know, your supply chain or whatever, why couldn't you create a pool of 100 vendors, only buy like 3 policies, and then you do basically a rate 5 or rate 6 system where any one of the vendors, if they have a problem, then they like check out one of the policies and the rest of them still have some if there's multiple failure.
Yeah, you would have to bind it to the asset, so you would not necessarily know who the beneficial owner of an asset is, but you'd be able to insure a specific asset. So if this particular, say, wallet suffers a failure of custody from some third party, whoever the actual owner of the wallet is, who can document their ownership, could then recover it. It wouldn't be a case of a floating policy that could be applied to arbitrary things. That would be pretty easy to game. But yeah, you definitely have to think about the risks of especially in a system that has lots of anonymous participants. There's a whole new field of like security analysis based on like economic arguments of things, and yeah, it's.
Thanks. I think we have space for one
Okay.
shorter question. So.
Maybe not a question, but a comment is that one of these like anonymous policies that work today even is the insurance against the state or some of its actors. Like you can insure your business for being raided. Here in Prague, there's like a really funny group. You can insure yourself against like tickets that you get in train for not paying, and it's quite popular and it's anonymous and it works. So it's maybe not the like big things, but this like small, stuff that. I mean, it happens regularly, but the math works out anyway. Like you know how many controllers are there in the city, how many controls they do, and if the pool of people you have in is large enough, then you just offset it. So, and this kind of stuff is what you want to do anonymously because it's not illegal yet. But this solar versus lunar punk thing is like one day someone decides like, no, you shouldn't do that, then there's no like backtrack to you.
Yeah. I have a crazy insurance policy. I would like to figure out someday if it can be created in the KNR space. Like, kidnap and ransom, like paying someone to get you back, does not have so much value as making sure that whoever kidnapped you disappears. And so like retribution insurance would be the sort of like the outsourcing what like JSOC does for the US people to people that have insurance policies. And that would be illegal and would probably need to be issued by like an anonymous DAO or something like that, but it would be a very interesting policy.
Ryan Lackey,
Cool, thanks.
thanks for coming once again.